A and B are partners in the ratio of 7:3. Their capitals were 6 lakh and 4 lakh respectively. After the close of the accounts, it was found that interest on capital at 10% was not provided. That means the accountant has failed to provide interest on capital and the profits have been distributed as such. Partners agreed to pass an adjusting entry. So now students, let us see how much interest was payable. That is interest payable to partners A, B and C. Remember, these are working notes, but they have to be shown very clearly in the question. There are only two partners, A and B. So I will write A and B. Interest on capital was 10%. So for A, it was 10% of 6 lakh, that is 60,000. For B, it was 10% of 4 lakh, which is 40,000. This implies a total interest was payable to the extent of rupees 1 lakh. This was the total amount that was payable. But the accountant has failed to provide for this payment in P&L appropriation. That means this much amount of profit has been divided in excess in the ratio of 7:3. As we had discussed just before this one, if the accountant has not provided for anything on the debit side of P&L appropriation account, that means he has divided the profits to this extent in excess. So already paid is 1 lakh in the ratio of 7:3, that is 70,000 and 30,000. 70,000 and 30,000, that is 1 lakh in the ratio of 7:3. Now students, concentrate here. Interest payable means this was the amount that was to be paid and this has already been paid. A was entitled to an interest of 60,000 but has already been paid 70,000 by way of excess profits. That means he has got an excess payment of 10,000 which should be taken back from him. So 10,000 is excess. I am writing in bracket here. For B, he was entitled to a payment of 40,000 but he has received 30,000 by way of distribution of profits. That means he has got less payment to the extent of 10,000. This is his deficiency. So what this table has given us is that A has got an excess payment of 10,000 whereas B has received a deficient payment to the extent of 10,000. So the rectifying course of action is that we will collect the amount of 10,000 from A and transfer it to B. So the adjustment entry would be taking from A and giving it to B. But remember, this entry has to be shown in fair. So you will draft a proper journal for this. That is, we will prepare a journal . This is date, particulars, then ledger folio, debit in rupees, credit in rupees. So the entry would be taking from A, that means A's capital account debited to B's capital account and the amount was 10,000 as we had calculated in the table. The narration would be being adjusting entry for omission of interest on capital. That is why this entry hasn't passed. It is an adjusting entry for omission of interest on capital.